should you use a buyer's agent, or can you actually DIY and buy yourself a property? And what does that actually look like in terms of information you need and mindset? Hi, I'm Jared Krause. I'm the co-host of the Property Pals Australia podcast.
And I'm Sam Powell, the other one. And in this episode, we get to talk to the lovely PK Gupta, who is one of Australia's leading property educators. He's built himself a really impressive $25 million property portfolio, both with residential and commercial. And he's helped over 3,500 people actually educate themselves into buying their own property. There's a lot of juice in this episode, isn't there, Jared?
Yeah, absolutely. We first start out talking about being an Australian, how privileged we are, the difference in mindset and psychology in investing in Australia. We talk about limitations, limiting beliefs that we can acquire through societal conditioning, through the people and the relationships we hang around with, and how that can hold us back in investing and what we can do about it. What else did we share, Sam?
Yeah, it was a really good chat because we also delved into the future of the Australian property market and PK's thoughts on that. He's helped a lot of people, acquire properties through coaching them through it, and the psychological challenges that they face. And most people do face these challenges, so it's really great stories to share. I know people are going to get a lot out of this one because we're all at different stages of our journey, but to succeed in this space, you need to get to that space of actually signing the contract and moving forward and taking each step. So once again, I really enjoyed this conversation, didn't we, Jared?
Yeah, it was so good. Like, we also talked about, the difference of buying a property yourself and using a buyer's agent, and who should buy for themselves and who should use a buyer's agent, and how to question a buyer's agent. We also talk about the Australian property market, and PK actually shared a different sort of story around where the Australian property market's going to head over 2025 and 2026 based on the narrative of everything else out there in the property market. So something to tune into. This is also not the only way we can help you for free. You can get our How to Maximize Your Borrowing Capacity mini course on our website. There'll be a link in the descriptions. But for now, let's dive into the pod. Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jared, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional. PK, welcome. Thanks for coming on the pod.
Thanks, mate. Yeah, it's great to be here. Appreciate you guys.
Yeah. Well, before we hit record buttons, you just shared with us that you moved overseas, over to the States, San Fran, set up, a non-for-profit yoga and mindfulness center. Congratulations. Sam was saying that he heard you a couple of years ago on a pod sort of share that you were going to do that, and then COVID happened, and now you've made it happen. So how's that?
So it's a lot for the old nervous system to take, moving countries, albeit maybe temporarily, because we still have our home on the Gold Coast, with a 6-year-old with schooling. And yeah, it's just like, it's probably the biggest, I don't know, maybe the biggest thing I've ever done in that sort of way. But yeah, I know you, Jared, you're in Indonesia, you've moved to Indonesia. So it's like, sometimes you have to, you just have to like push outside your comfort zone and sort of try to find a way to kind of maximize your, what you can do for the world, for yourself, your family, and for the world. So we thought, we always wanted to sort of be here in the sort of Silicon Valley area with a focus on mindfulness and meditation. And yeah, COVID happened in the middle, but we're really glad to be here. And I can tell you, people definitely need it here, from kids all the way to adults. They kind of have I don't know. In Australia, we don't really kind of chase after material things so much. Like it's more of a laid back sort of vibe. But in the US, I suppose the psyche is different. So everyone's chasing after the money. But in Silicon Valley, most people have the money, but they're kind of super fried and they're not really very happy. So yeah, we're just trying to see if we can add value to this space. Yeah.
I love that you mentioned that the psyche is very different. Being in Bali, there's all walks of life, and it's very multicultural here. And I used to work with helping just Australians acquire online businesses. Now it's mostly just US based investors, and the psyche is so different. And I love working with Americans because they're so, like, in terms of getting results, they're just go getters. But I don't think we actually realize as Australians how privileged we are when, like, I say to my friends, like, Americans are go-getters because they have to be go-getters. Australians can be like, we can be lazy and laid back because, like, we can literally lose all of our friends, all of our family, all of our money and our health, and we'll get free healthcare, and the government will give us money for food and shelter and give us incentives to, like, go out and do things. And it's like, in America, like, that you have to fight, it's crazy.
Yeah. And it's just that visual imprints of you have to fight are everywhere, especially like, I'm not in San Francisco, I'm Silicon Valley, but even here there's just like there's such a vast disparity between haves and have-nots. And so even if you're not so much like have to fight mentality, when you see people that are like, just today I had like this, a small example, like this gas heater in my patio kind of went out. So I had the guy come over, like a technician, to fix it. And he was just started telling me his life story for some reason. And it was just like, one thing after another. And then at the same time, my wife, she was to get her acupuncture appointment, and her acupuncturist was telling her like of her like sob story. And I was like, everyone has their story, and everyone's just like really needing to fight to stay afloat, in these stories or in these areas that we're living. And so it's like when you see those mental imprints and when you're associating with that, it's like, yeah, your nervous system kind of peaks up. It's like, even if you're comfortable, you're like, oh, damn it, I don't know if I'm comfortable enough. I need to keep pushing.
Right. Yeah.
That's a good point. I'm just trying to, this is something that I've been, discussing in my own brain and seeing in Australia too, is the erosion of the middle class. And obviously the American market is far greater and it obviously leads that way. And Australia seems to follow maybe a number of years or decades later. And I guess that's like, we do live a very comfortable life here, but I'm seeing it definitely shifting. And it's funny to say that because obviously we're a property podcast, but it's probably also just like in your own journey, you're all about giving back to community to help them grow their wealth. And those comments that you're making, it's just so true. Where there is this divide happening, and then you're also going up against the haves and the have-nots. But there's a multi-billion-dollar marketing industry convincing people to take their money out of them, and they're hitting this short-term dopamine hit, and they're not focusing on that that longer-term vision, which it gets harder and harder and more stressful. And it does feel that later in life you become a little bit more jaded if you haven't focused on that earlier in life. Do you think that's a fair call?
Yeah, I think the middle class, like, in Brisbane, growing up in Brisbane, you never really thought about inequality, or you never really thought about like rich people or poor people, just to use those terms. It was just like everyone's equal. Doesn't matter which uni you go to. Doesn't matter like anything. You just like, it's fine. And then I feel the Gold Coast is very similar as well. But like, I think if you go to Melbourne or Sydney, and I don't really like going to Sydney so much. No offense to anyone who's in Sydney, but like, it's just as soon as I hit the airport, it's just like, it's just like everything hits you, and all of a sudden, like you have to be on guard, and you have to like be alert to achieve, even just to get an Uber. It takes like 10 minutes to walk to the Uber place, and it's just like the car park's a mess, and then you go. Anyway, it's just probably like one perception, and people who live in Sydney are probably like, nah, it's fine. But I feel that Sydney and Melbourne being like the bigger world cities, it's like a cutthroat sort of dog eat dog kind of environment, and I don't think it ever used to be like that. Like even when I remember when my wife, she came with her family, like her mum and dad and stuff, in 2004 from England. They migrated, and she was telling me how 2004 Sydney is like what Brisbane is now, or Brisbane was 5 years ago,
Right. Wow.
and things
Interesting.
have changed so much, from traffic to like the need for external things for validation, like, you know, types of cars that people have or stuff. It's completely different. And yeah, drawing it back to America, I feel that Sydney's probably where America, or big cities in America, were 20 years ago. I don't know if that's true or not.
Sam and I were in. I want to bring this, loop this back into property soon. But Sam and I were in Miami, Florida, probably in 2011, Sam, and we're like, Miami, Florida is like the Gold Coast on steroids, and you can see like over the last decade the Gold Coast has gotten that way. Talking about like changes in markets and life, like COVID was an interesting few years, right? I didn't want to start the pod on this question, but we may as well while we're here. Like the next few years is looking interesting. Like we've had Darren from Property Share Market Economics on the pod talking about the 18.6 year market cycle. How do you see the property market evolving over the next few years in Australia?
Yeah, I think it's like I hate to be like really boring, but I think everyone wants to say like this time it's different, or things are different now, and you know, and those types of things, and I'm guilty of it too, make for great YouTube thumbnails and images and titles and stuff like that. But like, you know, if I look at 2025 versus any other year, I don't think things are that different. I mean, you know, if it all boils down to it, you're buying, everyone says this, but I'll just say it anyway. You're just buying one property on one street, one suburb, and one city, regardless of what's happening to the world: wars, interest rates, inflation, cost of living, inequality, middle class, you know, evaporation, currency debasement. We can get into all that sort of stuff. But at the end of the day, you're just buying this one asset, and it's dictated by its local supply and demand dynamics. So when it comes to like the 18.6 year cycle, which I think is thematically, not I think, I mean, my opinion doesn't really matter, but if you look at the data, thematically, yes, there are cycles. There are short-term cycles for the real estate market in Australia. There are long-term cycles for the real estate market in Australia. You might have a long-term downturn, but short-term upturns, vice versa. But there's no such thing as an 18.6 year prescriptive cycle. I mean, that's more of a American/global thematic, not just pertaining to property prices. So I think, you know, according to that, we're due for a pretty big downturn in 25, 26. But I'd love to come back in 2 years on this podcast and be like, prices are up, you know. So because that's what's going to happen. There's going to be, you know, Sydney, Melbourne this year is probably going to tank 5%, maybe 10%, depending on what happens to interest rates. But then there'll be other areas that go up 5, 10, 20, 30, 40%. So it's like, personally, I don't see like the value in like an everyday investor, not an economist or some sort of market analyst, or, you know, something like that. But everyday punter, I don't see the value in sort of deep diving these theories, because I mean, you're not buying the theory. You're not buying like an index of the entire residential real estate market. You're just buying one property. And if you get it right, that thing's going to go up.
Yeah, and there's so many different like nuances when you're going into property too, but also like the knowledge and education that you do get, yeah, it helps to de-risk it, especially, you know, when you understand that with property, right? It's not an investment class. It's predominantly, for shelter. So it's an interesting market. And then even during the GFC, there were still places like, Bendigo, Ballarat that saw, price increases, right? There's definitely always risks, and that's the hardest thing, right? Like everyone's trying to predict the future, but what I find is people that do live in that fear-based mindset, they they have the ability to do it now, but we don't know what the future holds, do we? Like, you could have the borrowing capacity and the financial ability to purchase a property now. Like, as an example, in my journey, we had a child, and at that stage, or my wife was pregnant. I was like, I need to invest in a property to get that good borrowing capacity. But things change, year to year in people's lives, and if you don't do it, like, this is what we are talking about earlier too with Jared, and that wealth divide came from people that actually had the action to buy an asset that appreciated in value, and those that didn't, over the last 5 years, it's really hard to see the disparity that's come as a result of it. So it's an interesting point that you make. Markets within markets, as they say.
Yeah, I love that's a good explanation, Sam, of like, you've got the market situation that people really, really focus on, but forget their life situation, like where you're at in terms of financially being able to acquire property, where you're at in life events in your career and your family. And that's another really big one to navigate, right, PK?
Yeah, I feel like there's like both sides to it. A lot of people have the wherewithal and the finances and everything to buy real estate, but then, like you said, Sam, they don't take action. And then there's the opposite, where people kind of overstretch themselves because they see an ad, or their mate made $1 million in COVID, and they're like, they got the FOMO, and they're like, comparing themselves to others, and they're really, because of cash flow constraints, they're really putting their family under pressure. But they're just like, I feel that they have this. I see this a lot in my Facebook group. A lot of people see great results that other people are achieving, and then they put all this pressure on themselves, as if by 35 or by 40, you're not a good person unless you already have a $2 million portfolio with an LVR of 50. And it's like, don't put that much pressure on yourself. There's no like, by 35 you have to have been married and a small property portfolio, and that's when you're winning at life. I think it's easy to see people in the media, like course creators or buyers agents or whoever, like, they've got their PR firms. It's like, we've got 50 properties, or 25 by 22 years of age, or by 30 years of age. And it's like, people consume that content and then they feel real crap about themselves. And it's like,
Right.
I live in Sydney. I just got like this one property. It's just my place I live in. And like, I'm living paycheck to paycheck, and they just feel terrible about themselves. And I think that's not great either. So it's like, if you've got the money, if you've got the wherewithal, don't sit on it, because otherwise it's just going backwards. And that's the definition of evaporation of middle class. But at the same time, like, don't confuse your net worth to be your self-worth. And I think that's a really important thing.
I love that you explained that. And I think people forget why they should be investing in property, or investing or building wealth in the first place. For me, the goal is less stress. And if you're looking at and getting FOMO from content without the full extent of the story, you're getting, in these pieces of content, you're getting the iceberg, the tip of the iceberg, without like all of the work that's been put in prior to that. And then you're comparing yourself to like the tip of the iceberg with where you're at. Just by having that FOMO, you're just putting pressure and stress on yourself without even investing. And it's just like, well, you're just like, you're coming from the wrong lens, versus like, all right, I want to get to there eventually, but like, let's not like kill myself to get there. Like, completely, like, obviously you're gonna have to do some work to get there to a point where you can invest, but like, if you're mentally like eroding yourself, then it's just going to make it harder and harder to get there, right? The mental game is the bigger than the finance game.
You probably see this, Jared, in because you're in the like online websites and digital space in terms of trading businesses and things like that. I don't know if I'm out of order or if I'm just not educated on the subject, but it really seems to me that like the digital space is filled with a lot of young male like alphas trying to become like the next Cardone or like some sort of American export personality. And I'm, all credit to anyone who's made it or is making it, but it just feels like really toxic. And I don't want like that, because then people are like, they question their masculinity if they don't have X followers or, X watches or X cars or X whatever. And the risk is that sort of, I don't know, ecosystems vibe seeps into the property vibe, because it's been so easy to make money, just like it has been so easy to make $1 million. I mean, anyone who started anything digital, in the 2000s or even 2010 to 15, I mean, you'd be hard pressed to find someone that was sort of half clued on that hasn't done well for themselves.
Right. And then it's just easy to turn on a camera and look at, and be a talking head and just talk about that you're an expert, doing it when like, I've been helping people acquire business for a decade. It's very different when you've been through economic times and pressure and stress. And, I'm not a property expert. I can't claim to be a property expert because I only bought my first property like 3 years ago, and that's why on this, I'm not claiming to be an expert. I'm just like, I need to get you on, PK, so I can learn from you guys, you and Sam. Like, I'm just the beginner here. But yeah, like the mental game is probably the biggest one than the financial game. And I don't think people invest enough in themselves mentally to withstand challenges through building a portfolio. Even just the challenge of getting through the first one. Sometimes people just get through the first one. It's like, they can't even deal with like the stresses of finance and setting it all up and all that sort of stuff. And yeah, it can be hard, but like when I do it, I look at it as like, cool, like that's a challenge. Like I'm a bit sick in that sort of way. As like the harder the challenge, I know typically the better the reward can be. Typically, it's a very general statement. So I think investing in mindset is huge. How has your mindset evolved since you bought your first property?
It has definitely evolved.
Have you learned different things that you could share, like highs and lows that you've gone through, and how you've dealt with some of those things building your portfolio?
Yeah, I mean, I was a 21-year-old guy, right? So which 21-year-old guy doesn't want to like have $1 million and all the rest of it? So that was my mindset. It was like I was in investment banking, and that tells you a lot in of itself of my mindset of how much sacrifice someone has to make to get into that industry and just stay in that industry. And yeah, I mean, I said it before. I remember when I was like 14, I used to Google like how to make a lot of money, highest paying careers. And that's why I found investment banking. I was like, this is what I'm going to do because I want to make 6 figures out of uni. And that's what I did. But yeah, it was like really hard work. I'm like kind of like a lazy person. So it wasn't really for me. It was really intense. It was like 90 hours a week. So yeah, property for me was like, it was like the only other alternative, because even though I was in the stock market or equities market, I wasn't really able to make that much money, even though I was like on the inside having access to people that normally folks wouldn't have access to. I don't know if it was just me, but I just couldn't make that much money. So for me, real estate was the only other alternative. And for me, it was like, I just have to go all in and really make this work for me, because otherwise I'm stuck, making great money, but working 90 hours, and my boss was working even more and his boss was working even more. I don't think there was a single female on the floor. That kind of also tells you about the kind of culture on the trading floor and the equities research area. That was my mindset, my psychology. And as I went through, I think the more success I had, and I got married, and then you have that feminine influence, etc., you kind of start mellowing out, and you start to understand that, that after a while, whether, there's 4 figures, 5 figures, 6 figures, 7 figures, 8 figures in your net wealth or in your bank account, like it doesn't actually matter. There's studies by Harvard that I was super doubtful of. I think there was something like after $120,000, your happiness doesn't actually improve, income on a yearly basis. I used to like think that was, you know, for people who couldn't make 120,000 or 100 or more than that. But my experience has been literally that. And once I got to 120K passive, I'm at more than that now, but I don't feel that I'm any happier. So I think I've matured, maybe hopefully not become more cynical, but become more realistic on life and become more, like internally wholesome in the sense that I know what makes me happy and I'm just going to go for that instead of all the things that I thought used to make me happy. And I try to espouse that as well to my community, although it's hard because, you know, I like in property and
young
finance,
21-year-old
I sell a
guys.
course, you know,
Yeah.
it's like, oh, it's all the opposite. It's like, I should be talking Gary Vee, but that's just not me. So, yeah.
I'd like to double back on because the common question around stocks and property, and like you're just that classic person. Like I've had friends in that investment banking world, and yeah, I hear it's just really competitive. But to see you working in that industry, and obviously there's opportunities there, like because I did property economics and I went into valuation and I did a bit of financial planning, and I haven't had that sort of back of the, I guess, experience you've had seeing those stock markets, because generally it's like a 10% return. You know, everyone's just going into those types of markets. But then I also see some businesses, if like you can go through and analyze a certain business, you can see, you know, PE ratios might be really in favor of growth, but you know, you've gone down that property route. Like, what's your answer to those questions when people, you know, are asking which path to go down, stocks or property?
I think it's very simple. I think if you do the math and the modeling, which I have and many other people have as well, the stock market, not so much the ASX, but definitely like the NASDAQ and international stock market indices, they outperform Australian real estate hands down. I don't think there's any like question about it. But when you leverage, you know, when you leverage real estate in Australia, then you do much better. But so then the obvious question is, well, then you can obviously leverage the stocks as well. I mean, there's no one saying you can't leverage stocks. Most banks won't let you up beyond 50%, but some will up to 80%. In fact, you can take equity from your PPOR, use that equity to leverage to the moon if you want, and get into whatever index or ETF, etc., that you want, which has historically outperformed the sort of 7 to 8% growth in Australian real estate. Yeah, you can totally do that. But the simple answer is, how many normal sort of mum and dad Australians are happy to leverage a stock portfolio of above $1 million at even just 50%, right? I mean, if you do it at 50%, or I think the sweet spot was like 67%, you beat a leveraged 80% leverage real estate portfolio. You beat it hands down. So you actually need less leverage in the stock market because stocks perform better, especially American stocks, etc., the indices, etc. But who has that kind of risk appetite? And
yes,
I know a lot of my investment banking buddies, they always like, they pin me down. They're like, oh, you'd be making so much more money if you invested in this, that, and the other. But I'm like, well, like, did you invest in that? And did you take out a $600,000 loan? And they're like, no. Well, I'm like, well, then I just beat you. You know, it's like, and that's what it comes down to.
It's the emotional roller coaster, isn't it? Like Jared and I started. I remember Jared back in the day. He was, oh mate, do you remember that Excel spreadsheet? You're like, if I just invest this much money, then
I might have been like 18, 17 maybe. Like I started investing in the stock market with Dad when I was 15. I was like, did the compounding effect, and I mean, I just didn't have the emotional fortitude to make that happen, right? Like to stick with it, Sam.
Oh, well, I was the same thing, but I also went further down that, like the typical, I guess, I'm seeing it now too. Maybe it's a reflection of the market cycle where you see all these currency traders and everyone's selling you a currency trading course. And, you know, it's very interesting. The older you get, the more time you get to reflect on it. But, you know, you make $2,000 in a day and you're a genius, and you lose $2,000 the next day and you just hate yourself. And for me, that, like, adding leverage to a more volatile market, and that's what I loved about property, because you can't really see its true value every day. Like, that's what people do. They're on their phone, and it really affects their emotional state, which going back to what we were talking about earlier, there's so many different elements in life that people seem to just focus purely on wealth, and then they forego their health and good relationships just to chase that wealth. And no, that's something that I was bestowed upon with my dad. It was like, focus on health first, then good relationships, and then wealth. Because you could be the richest guy in hospital with no friends or family around you, and all you want is your health back. And it seems to be really great advice. So cheers, Dad.
That is great advice. I love it. And as we just age, we start to realize, like, you're the asset, right? Without your health and your emotional fortitude being the asset, the real asset, you're not going to be able to put that towards leveraging investments. PK, I want to ask you about, like, you've helped a bunch of people, like so many people, 3,500 properties acquired, probably more now since I don't know how old that is on your site, but through building property portfolios and helping people build out property portfolios, where do they get stuck typically? What are like 2 to 3 places they typically get stuck that we can share with people to sort of get prepared for, so they don't have to get stuck themselves?
Yeah, that's a really good question. I think the first place they get stuck is in their limiting beliefs. So I think they're due to childhood traumas, or not even like massive traumas, but just childhood experiences and association of their, what their parents were like, or like the type of people they hung out with at school. They have these limiting beliefs that I can only do this, or I can't do that. And even if they have like a system, even if they have everything, tools, people, everyone there to help them, it's this kind of self-limiting belief system that overrides from a subconscious level and stops them from actually taking action. So, you can have a person who's found the best suburb, quote unquote, best property, and then it's like, they've called the agent, and it's like, they've got the agent to agree the right valuation. They're not overpaying for it. They put the right terms in the special conditions box. They've done all the detail, like everything. And then it's like, they just can't seem to sign the contract. And it's like, well, what's the problem? Let's go through it. Like, let's go through the 5 why analysis. Why can't you sign it? They're like, I'm not sure about it. Okay, well, why aren't you sure about it? Oh, I'm not sure about the suburb. It's like, oh, why aren't you sure about the suburb? I mean, I've done all the data, but what if the data changes next year? Well, why do you think the data will change next year? Well, what if there's a recession? Why do you think there's a recession? And it's like this infinite, regress, this loop. And it all comes down to their mindset. And it's more than their mindset. It's at a subconscious level. And, I'm not a psychologist or a psychiatrist. I can't sort of help them walk out of that. That's beyond my pay grade, so to speak. So I think that's definitely one area that people struggle. And of course, that is, in my experience, that's best overcome by seeing other people that are just like them, similar backgrounds, maybe live in the same similar location in their city, similar profession. They see them taking action, then they're like, okay, a person like me can also achieve this. It's phenomenal. I could take buying a property for granted, but for some people, this is like a insurmountable mountain. And when they do finally do it, it's like, I get this massive email, and I'm like, and part of me is thinking like, it's not such a big deal. You just bought your first investment property. But then the other part of me is like actually resonating with them, and literally crying through the words of their email, of how grateful they are that they're able to do this, maybe because they were stuck in a poverty cycle, or maybe they come from like a broken background and they were in housing commission. There's so many things. So like it's I think the subconscious limiting beliefs are one area that people struggle. Of course, there's various practical reasons why people struggle as well, but all those practical reasons are solvable, I think, as we all know, through education, or sort of someone to help them do it. I think maybe the last one I'll talk about real quick is where people feel that their partner doesn't support them. That's surprisingly common, whether it's the wife or husband, or whatever kind of relationship they're in, when they're having to kind of drag their spouse along, the journey with them like an anchor. I feel that is something that really takes a toll on them. And then they start building resentment towards that person because they know that, for example, I have this client and they've been in the course for like years and they hadn't bought anything. And, they emailed me, I think a few months ago or something. They were like, I'm seeing all this success, but I'm not able to get success. And, I haven't even bought anything. I'm thinking the course was a waste of my money, etc. I'm like, well, why do you think it was? And they were like, well, it's because my partner doesn't support me. And I see that if I had bought in 2021, I would have made like $500K, $1 million just on this one property. And that
Wow.
regret fills me with so much like paralysis that now I can't bring myself to do anything. And I don't know what to say to that. Like, I'm like, that's once again, I'm not a trained psychologist or something, but all I can sort of give advice or what I can say to those people is that we all make mistakes in the past and we just have to like level set, Sure, we all wish we bought properties earlier. We sure all wish we did so many things earlier, but it's just a case of like, all right, well, what's the best with what I can do now? And let me just take the smallest step to do that right now.
I love that. I love both those examples. The conditioning, and it can be family conditioning, societal conditioning, and then also that dovetails into relationships that you have in your life where, even family, like, outside of just your partner can hold you back where you're like, oh, maybe you shouldn't invest in this because like, there's a risk, and your family, like, all they want to do is keep you safe, right? They have the best intentions because they love you and they want to keep you safe. And they don't want you to, get hurt. And I remember, example, the second business that I ever bought was the best business that I ever bought. And I achieved 100% ROI in 7 months on that business. And I did due diligence for like over a month with my dad. And my dad was like, you cannot buy this business. Like, this is dumb, stupid mistake. You can't buy this business. And I went against dad, and my dad just didn't want, because it was risk, right? There was risk, but there was that awesome upside potential that I got as well. But it was like, that was a platform that catapulted me into like, okay, look, I don't need, like, I consult my dad and I chat to my dad still, but it's not necessarily I need to go by his opinion. And then also it freed up my limiting beliefs as well. And so it also allowed me to put myself in different relationships. And that's what, like, you are the average of the 5 people you hang around with. That's a very general term. But like, if you're hanging around with people that are not into property and they think property and building a big property portfolio is like, it's too risky, too scary, and can't really be done, then you're going to have that similar psyche and mindset versus like, if you do want to get into property, and say for this example, I'm not sure if your client who did the course has invested in building a bit of a community around himself or advisors around him in property that he leans on and uses. The more people that he has in that life, the more normalized it is, which means it's less likely he's going to be like feeling that his partner might be holding him back. I'm not a trained psychologist either, but like it makes logical sense, I would say.
Oh man, it's massive. I've got clients that are exactly that. Great deal, and then it's like you just need to sign the contract and it's yours, and then it all unravels. And I resonate so much what you say. I think that's probably like where I've been leaning further and further into education, and with that example, and I mean, we're just riffing it here, PK. So, did the partner go through the course as well, like to help educate, or like do you not have knowledge on that?
No, I think what it was is like the partner never thought buying a property was a good idea, like investing in property was a good idea. The partner never thought buying the course was a good idea. And like there was just no support given by that partner to this lady. And so like she had all this pressure on herself that I often get this, like people when they buy the course, they say, like I've done this against my partner's wishes. I have so much pressure on me to make this work because it's like $6,000 ain't cheap, and it's like, this has to work. Otherwise I'm not going to hear the end of it. So I don't know, even outside of finances and property, when you don't have a supportive partner, you just have that pressure, right? Like I remember when I took my son out of he stopped doing soccer and I wanted to do jiu-jitsu because I just felt that it was right for him. He's 6 years old, it's not a big deal. But and my wife was like, like no one in our family's ever done martial arts. You're not exactly into martial arts. Like your soccer's great. Why are you taking him out of soccer? And it was just conflict of schedule. We couldn't do both in that particular time. And I felt like pressure, even though it's like a whimsical example. I was like, well, I hope he loves my jiu-jitsu because otherwise we've missed the whole term for soccer and it's a wasted term. And she's going to like, whatever. So, whatever it is, if we don't have our partner's support, then it makes things difficult. What to speak of something where you're actually spending half of their money, like $500,000 or 400K. So yeah, that was a bit of the background.
I can only see the downside as well. Like with residential property, often there's cash flow where you're investing in that future, and it might be a few $100 negative cash flow, and that takes away from that short-term dopamine hit that we were talking about earlier. And if you don't have that partner on board with you, I can see how that could be really detrimental, because property is not a short-term game; it's a long-term game to see that success. I'm getting a lot of value out of just sharing these stories. So it is a psychological game, as you said, Jared.
Yeah, such psychological game is the foundation, and then the finance game is so much easier once you have the ability to be confident, right, or have some level of confidence. Now, we're talking about like buying, like going through your course and buying a property yourself. We talk a lot about, like in the pod, other episodes, about like questions you should be asking buyer's agents and how to choose the right buyer's agents. You talk about it's not necessary to use a buyer's agent. I would love for you to explain how and why people can go through acquiring a property without using a buyer's agent.
Oh, okay. Didn't expect to be asked this. I mean, I'll just keep it at a high level. So I think I'll just start off by saying a lot of respect for good buyer's agents. And I think where I differ with a lot of people is I think that there's about 5% good buyer's agents and 95% not so good buyer's agents. And I think that's a little bit different from other industries, because the hurdle to become a buyer's agent or a course creator or anything is non-existent. Like it's basically nothing.
It's pretty non-existent, right? Yeah. I could do it tomorrow, really, if I wanted to.
Right. Yeah. And you could start a real estate course tomorrow as well. So it's not like I'm trying not to be biased against.
I could just regurgitate information that I've learned from the internet, pretend that I knew what I was talking about.
Right. Yeah. So I think it's, people have been buying property themselves for decades. In Australia, buyer's agents are a fairly new phenomenon, especially at the scale, probably the last 10 years. Like when I started, I never even knew what a buyer's agent was. And everything they do, people can do themselves. Like Sam said before, the only difference is you need a keen appetite to learn, and also you need time, So it's like they're not an electrician, they're not a surgeon. To become an electrician, there's a lot of experience you need, apprenticeship, there's formal training, etc. It's very technical. Surgeon, let's not go there. It's like 10, 15 years of training. Buyer's agent's a little bit different. I feel that buying property is a bit like gardening. I've used this analogy before. And, can you go and do the garden yourself without any education and without any tools? Absolutely not. Like, you'd make mistakes. But if you go to Bunnings, get the right tools, you do a bit of YouTube, figure out in the right season what flowers and plants to sow, what seeds to sow, where to sow them, the shade, how the sun sets. So there's a bit to it. You can do it yourself. Of course, it's easy to outsource it to a gardener or a landscaper, and now that's just like using a buyer's agent. The only difference is if the gardener or landscaper messes it up, the trees or plants or whatever, they generally grow back. Whereas if someone messes your wealth up, it's kind of a little bit different. So I'm a big proponent of being empowered and really understanding that no one cares about your money as much as you do. And that includes me. Like, I don't care about my clients' money as much as they do. And that's just a human fact. I think we all have to be honest and transparent about that. And that's why people really need to understand what they're doing and not outsource the accountability or responsibility. Insofar as like, how do you buy property yourself? I mean, it's not rocket science. I think everyone knows how to do it. These days, there's so much data. You select the right location, street, property based on both online, offline data and phone calls to local boots on the ground people like property managers. Everything's done virtually these days in terms of contracts and everything like that. You get the inspection done by locals like property manager, building and pest inspector.
Yeah.
I mean, I could go through it all, but it's, anyone can do it. It's pretty easy.
Yeah. Also find that like when you're buying your first property, it depending on where people are at financially, to pay $15,000 for a buyer's agent fee, it can dig into the deposit when you're buying your first property. And some people have less money but more time, and there's other people that have more money and less time, or want to spend less time on it themselves. So there's different horses for different courses, right? And I think I think the better decisions you make are the decisions based on the more education you have.
Yeah. Look, it's buyer's agents are like a expensive labor hire. If you don't have time, have a buyer's agent do it for you.
Yeah.
But I think, like you were saying before, Sam, like just be educated so you can verify what the buyer's agent is doing. And that will also make the buyer's agent's job easier because provided they're a good one, then they'll also agree with you and want to give you the requisite detail that you're after. I mean, too many times you have the 95%, which, it's crazy actually, because my clients forward emails and sometimes they're using buyer's agents. They'll forward the deals over and be like, what do you think about this? I'm like, what do you pay this guy $15,000 for? Anyway, and the email will be like 3 bullet points, be like, great street, great growth corridor, and X yield. And then they'll attach a core logic report that's rebranded in their colors and be like, make a decision. And it's like, well, how do you make a decision based on that?
Fully,
So
yeah.
I'm really talking about the 95%, like I said before. 5%, great buyer's agents. They've bought for years. They've built up a portfolio themselves as well. They're ethical. There are some great ones out there, but oftentimes it's not really those that you find out about through Facebook ads or YouTube ads, or that often come on the mainstream podcasts.
Yeah, there's good, there's great, and there's shit in every industry. But there's like being in the space too, like marketing. That's like you get businesses that they're really great at marketing, and then you don't know, and you don't even know what you're getting involved in until you've paid the fee, and then you've also got nothing to compare against either. So I guess that's one thing that I'm very passionate about, is like making sure that you're talking with the right people. And as I said, there's time and place for everybody. I think education is really key. But once you have the confidence and the trust that someone has your obviously best interest at heart, it's just going through the process. And that's what I've sort of found too. That's why I'm leaning more into education, is because the best client experience is your ability to teach people, why you're doing certain things, and they come along with the journey, with you. And the reason why is because when you get into that, sign that contract for, I do investors, but also owner occupiers as well. It's a different sort of story, but it is hard to sign that contract when it's multi-million dollars, or even it's even $500,000. Like, and to have the confidence to sign that thing comes through the right process, onboarding process. I've come to realize, and I guess that's why we are here, to try and share the love. And there's no one way to skin a cat, right? Oh, that's probably not the best analogy these days.
It's a tried and true one, though. Everyone uses it.
No, you're right, 100%.
PK, it's been so good to have you on. Thank you so much for coming. Where can we share your course so people can suss it out and we'll send links to your YouTube channel. What's your YouTube channel, just so we can shout that out, but we'll put links to it as well.
Yeah, I don't worry about the course. I mean, the main thing is people just go to what's it called? Australian Property Mastery with PK. That's the YouTube and also the Facebook group. Just get educated, suss things out, Don't worry about doing no course or anything like that. Just suss things out, learn, be part of the community. I mean, people buy great properties without my course just by being in the community as well. So cool. I think that's the main thing.
Yeah. And as always, if you do have any questions, put some comments in below. Like, that's what we're all about: learn, do, teach, share, and grow. And the better we can grow, the better guests like PK we can get on this, and change the way that people actually transact in property. Because it's an expensive thing to get wrong. So thanks for your time, PK. I really, really appreciate it, all the way from the United States of America.
Thanks, guys. That's really cool to be on.
Yeah, appreciate you. Thanks, everybody listening, and we'll see you on the next one.